All right, today we're looking at SHS Holdings' latest financials. And wow, there's a real head-scratcher here. They're making record sales, but at the same time, they're posting record losses. How does that even happen? Let's dig in and figure this out.
So the big question is, sales up, profits down? It just doesn't seem to add up, right? Let's look at the actual numbers.
Okay, so check this out. On one hand, you've got revenue just blasting off, up almost 50% from last year. You'd think they'd be celebrating, right? But then, you look at the other side. Their net loss didn't just creep up, it absolutely exploded. We're talking an 85.7% jump. That is a huge problem.
So yeah, how can both of these things be true? It feels like it breaks the laws of business physics or something. More sales should mean more profit, or at least a smaller loss. Let's start breaking this down.
Okay, first up, let's unpack that revenue boom. It's a pretty impressive story on its own. So, the big number here is 48.5 million Singapore dollars. That's what they brought in for the first half of 2025. I mean, to put that in perspective, a year ago they were at 32.6 million. So they've added almost $16 million in sales in just 12 months. The big question is, where did all that new business suddenly appear from?
And here's our answer. This chart pretty much says it all. Engineering and construction did well, solar energy is there, but look at the commodities segment. Just look at it. It went from a tiny $1.7 million business to over $17 million. That's not just growth, that's a tenfold explosion. It basically came out of nowhere to become one of their biggest divisions overnight. That is a massive, massive shift for the company.
And here's the how. It wasn't organic growth. This whole surge came from one single huge move. They bought 2 aluminum businesses in China. And this happened in June 2025, like right at the very end of the period we're talking about. So they basically just plugged this whole new business into their company, and bam, all that revenue from aluminum manufacturing and recycling hit their books at once.
Okay, so mystery number 1 is solved. The revenue boom came from a big acquisition. But that only makes the other part of the story even weirder. So let's get into it and solve the profit puzzle.
When you dig into why the net loss got so much bigger, it really boils down to 3 main culprits. First, we've got these things called unrealized foreign exchange losses. We'll get to that. Second, and this is a big one, that brand new commodities segment, well, it actually lost money. And third, just the basic costs of running the business and managing new debt went up.
So let's quickly unpack that first point, because foreign exchange loss sounds complicated. Really, it's just an accounting thing. Imagine you have $100 in your wallet. If the US dollar gets weaker compared to the Singapore dollar, your $100 is suddenly worth fewer Sing dollars. Nothing actually left your wallet, but on paper, its value went down. That's what happened to SHS with some of their assets, and it ended up being a pretty big hit to their operating expenses.
But now we get to the real heart of the issue. Remember that new commodities business? The one that brought in a massive $17 million in revenue? Well, it actually reported a gross loss of $200,000. A gross loss. That means just the cost of making and sourcing the aluminum was more than what they sold it for. That doesn't even count paying for things like marketing or office staff. That is a major, major red flag.
And this table just lays it out so clearly. Look at their other businesses. Corrosion prevention, solar, engineering, they're all making good money. For every dollar of sales, they're pocketing between 15 and 24 cents in gross profit. Healthy, solid businesses. Then you get to commodities, and it's negative 1.4%. It's the only one in the red. They were literally paying customers, in a way, to take their aluminum.
So this acquisition wasn't just a simple add-on. It completely changed the shape of the whole company. Let's look at the impact it had on their overall financial health. And I mean, it got way bigger. Just look at the total assets. They went from about $177 million at the end of last year to almost $300 million just 6 months later. We're talking about all the new factories, all the new equipment, all the money customers now owe them. The company basically swelled in size.
But, and this is a huge but, here's the other side of that story. To buy all those assets, they took on a mountain of debt. Their total liabilities, what they owe, didn't just double, they quadrupled. From $37 million to a jaw-dropping $152 million. And that's not just a number on a page. That's real debt that comes with real interest payments, which are going to be a drag on their profits for a long time to come.
So, to sum it all up, SHS made a huge transformational bet. It gave them incredible revenue, but it also tanked their profitability and piled on the debt. So the big question now is, what's next? How are they planning to turn this around?
For their original bread and butter, the engineering and construction side, the plan is simple: stay the course. They're focusing on finishing up the projects they already have and getting involved in big local stuff, like Singapore's MRT network project. You could call this their stable, reliable cash cow.
Now, for their solar energy segment, they're thinking bigger than just panels on a roof. They're looking at what's next, They're getting into battery storage systems and even EV charging stations. They're trying to become a much bigger player in that whole green energy space, which is obviously a huge area for growth.
Then you have their corrosion prevention business. And here, they're hitting the brakes a little. They're saying the market is really tough, really competitive. So instead of chasing every single contract, they're going to be a lot more careful, only taking on jobs they know they can make a decent profit on. It's all about profitability over just growing sales for the sake of it.
And so, that really leaves us with the billion-dollar question, or, well, the $150 million question in this case. SHS went out and bought themselves a ton of revenue, but it came at a seriously high price. So can they actually get this huge new aluminum business under control and turn those incredible sales numbers into actual real profit? Or did they just buy themselves a very, very expensive headache? That right there is the story we'll all be watching.